Hey,
Hey, everybody. Happy Tuesday. Thank you so much for joining us today for another Stocks from Scratch deep dive. I see Santo is here. Good morning, Santo. Walt's here. Jayhawk's here. Andre is here.
hey,
Klaus is
all
here.
over the place.
Boise, Germany, Wisconsin, the magic of the internet, Boston. Hey,
Mombosa,
hey, neighbor.
Cyprus, Kuwait.
Amazing. Amazing. That's so cool to see. And Mr. Stoffel, we are doing a stock that I don't think either of us have ever gone deep on
No.
today. So what stock are we're going deep on today?
So this was voted on by all of our newsletter subscribers, which you can join for free. And it is Robinhood. I
Robinhood.
believe the four choices that we had included AppLovin, which came in third. SanDisk was up there, but I'd say Robinhood was a pretty clear winner there. But
Yeah.
yes, I tend to shy away from finance first companies just because stuff can get a little bit weird. The way you look at a balance sheet, a cash flow statement's a little bit different. But that's a good primer, right? So like if you're a Robinhood expert, you might hear us say some things and you're like, well, these guys don't know what they're talking about. Let's be very clear. We don't have a ton of background with Robinhood. So
Yep.
fill us in if you notice something.
Yeah, I like to show this graphic because it's like, it shows that some companies are easy to research, some companies are hard to research. I would put Robinhood about here.
Yep.
Financial companies require a little bit of extra analysis. They have some different risk profiles, different metrics you have to look at. So this is not going to be the easiest stock to analyze, but we would love to know from everybody watching, do you own Robinhood? Just tell us yes or no in the chat. Are you a shareholder of Robinhood? I am not. Stoffel is not. But
And
this doc
not
is
a
done.
user either.
We are users.
We are users.
Yeah, remember we signed up for Robinhood a couple years ago.
Yeah, no, but I thought we sold
Yeah,
all
you're right.
those. Maybe we
We're
did.
not active users. We're
I'm
not
not an
active
active
users. We
user.
did go through that. We did go through the process. If you're new here, by the way, my name is Brian Feraldi. I've been investing for 20 plus years. Here are my returns over the last 14 years or so.
And here are my returns as of the beginning of the year. Mine are in the green, the NASDAQ in the yellow, the S&P 500 in the red.
And in this series, we research a stock from scratch using our proprietary tool called Stock Simplifier. It is a 7-step process where we show you how to analyze the company's phase analysis, the business moat, key metrics, risks, valuation, and more. So that's what we're going to do together over the next hour or so. Now, Brian, the first thing that we like to answer is, well, which phase of the business growth cycle is this company in? The reason we do this first is because the way that we should analyze and judge the company's metrics as we uncover them matters greatly based on where the company is in its growth cycle. So I would love existing users to guess, what phase do you guys think that Robinhood is in right now? Now, while we wait for those to come in, I'm going to open up a fresh copy of Stock Simplifier and get fiscal going. I'm going to pull up our AI prompt library so we can use this. And I'm going to also pull up Gemini. We're going to use Gemini to analyze the company stock. So I have my, go ahead.
Couple quick things. I would say that only about 15% of people who responded own it. So it's not one that's like heavily owned, but obviously people are interested. And we're getting guesses all over the place. I would say on average, 3 to 4 is where people say it is. I would have to look, but my guess would be 4.
So one thing that is worth noting about Robinhood, did you know that this company is a market beater since coming public?
I did, because I was aware of how well it did between basically in 2025.
Yeah. So IPO'd in 2021, horrible time to IPO, or great time from a pricing, terrible to be a buyer of stocks, just immediately dropped to down huge. And it has since dramatically rallied back. A lot of volatility recently, but how many stocks that IPO'd in 2021 can you say are beating the market? I mean, that puts this company in rare air alone. So, okay, let's go ahead and run some prompts on this and see. I will zoom in so that everyone can see.
Yeah, there you go.
So we'll do
much better.
Robinhood. And let's see what it says. Okay. This says in capital return phase with a high degree of confidence. Why? Well, operating income is $2 billion, so positive. Revenue grew 52% in 2020.
Not your typical stage 5 revenue growth
Not
figure.
at all. And it does have a capital return program, not almost $1 billion since 2024 and $173 million so far this year.
I will say this is why I personally always argued. I know it's not perfect, but a dividend this is why a dividend to me is the trigger. Like those buybacks are nice. I would love to look at their operating profits and their revenue growth, because to me this is still very much stage 4.
Yep. So I think it's stage 5, and the thing that I've got in my mind is how much capital are they returning compared to how much cash they're generating. So I like the mental model of just in my mind, I'm like, okay, so if they bought back, let's just call this $1 billion, right?
Mm-hmm.
And they generated $200 million in operating profit. That's half of their operating income they're devoting to capital returns.
But that's $1 billion over the last year and a half, 2 years. It's
so probably 30% of their capital they're using to return to shareholders.
Yeah.
My point is, it's not an insignificant amount.
No,
but
it's not insignificant.
You are clear. These are squishy lines. These are squishy lines, and they're transitioning from a high growth disruptor to a profitable finance institution. I totally agree with that. But for the sake of our analysis, I think capital return actually makes sense. And we can certainly do some basic valuation work in the operating leverage phase, but I do think capital return is what I would go with. Okay. All right. Well, thank you for that. So there's some details on that. Okay. Up next, what does this company do? How does it make money? We're going to look at quantitative questions like what does it do? And we're going to ask qualitative questions like how frequently do customers buy? Do we think it can raise prices? And what happens in a recession? I would say that last one is going to be pretty darn important there. So we'll do some business analysis. We'll run this into Gemini. And
I would say this is the one that for myself, since I haven't really spent that much time on it, would be the most educational, this next prompt for me.
Yeah, I want to see how good of a job it does too, because I know there's a lot going on here. Okay, using Robinhood's 10K filed in February of 2026. So pretty accurate. What does it do? One more deeper. Robinhood is a financial services platform, provides commission-free trading for equities, options, and cryptocurrencies. Its mission is to democratize finance for all, primarily serving a mobile first generation of investors through a vertically integrated platform that includes brokerage, retirement accounts, and cash management services. I'd say that that's pretty spot on.
This is very much the whole like land and expand, like get popular through stock trading, but then have people put their IRAs on there, their cash on there, and so on and so forth.
Yep, you got it. Okay, how does it make money? Robinhood generates through transaction-based fees, operating income, transaction-based revenue of $1.65 billion. Options are 18%, crypto is 15%, and equities are 4%. So look at that. Commission equities are like trade. That's buying and selling stocks is like the minority of revenue here.
Yep.
Net interest revenue of $1.1 billion, 25% of revenue, and other revenue, $1.7 billion, 38% of revenue, significantly boosted by recent expansion into the gold subscription lines. Okay.
I want to know more about those. What is a gold subscription and what are those new service lines? Like that would
that's
be
a recurring fee that's a recurring fee that you pay, and that gives you access to premium features. I think you get like
and
a higher
I will say
rate.
I also saw that they came out with a credit card, I believe, within the last week that was getting a lot of talk on
yes,
Twitter.
Very high cash back, something like that. Yep. Okay. Who are the customers? The core customers is individual retail investors, millennials, and Gen Z. 27 million funded accounts. Robinhood expanded into high net worth individuals through its advisor network.
Oh, see, now that's interesting.
Institutional trading via its Bits, Maps, institutional crypto trading, Bitstamp acquisition. Okay. Mm-hmm. Where does it operate? In the US, 95% of revenue. International is in the UK, 5% of revenue. And with the rollout of UK and EU trading, All right, business dynamics. How often do customers buy? Engagement is high, but cyclical. Robinhood measures this via monthly active users and daily average revenue trades, or DARTs. While trading is a one-time event, the company is successfully shifting towards recurring behavior. 4.2 million users pay for Robinhood Gold. And the
That's not
retirement
bad.
that is quite a lot.
That's over 10%.
And the retirement now holds 27 billion in assets, encouraging long-term retention. Yeah, retirement assets are definitely what you want, right? Those are
Yeah.
locked up for decades.
Yep.
Especially if their user base skews young. Can it raise prices? Robinhood has limited pricing power in the traditional sense due to its commission-free brand. However, it demonstrates monetization power layer in premium services. Evidence include a 16% year-over-year increase in average revenue per user.
That's a really, I mean, that's like a 16% like dollar-based net retention. That's good.
Yep. And 58 growth in gold subscribers who pay a monthly fee for enhanced features and higher interest rates. Okay. $199 is what they're making per user. That's cool. And that number is increasing. So can you call this sneaky pricing power?
Yeah, you probably could.
Yeah. And then finally, what happens in a recession is historically cyclical. In market downturns, retail trading volume typically drops, impacting revenue. It shows a more durable product mix. An 18.4 billion margin book and 31 billion cash repo provides a buffer that was absent in previous cycles. So it is cyclical, but it's more resilient today due to its margin portfolio and cash sweep book that was absent before. Okay. Good to know. So I would love, after reading that, what do people think about this business? Red, I'm really confused what the heck this company does. Yellow, I get it. And green, not only do I get it, I'm pretty excited about knowing what this company does. Would love to know what people think. Stofa, where will you be on this map?
If I was doing this, I would be right here where Santo is in yellow. But don't take that says more about me than it does about Robinhood, to be clear. This is just outside of the sandbox that I normally play in. Although I will say I'm not alone. Mircea is green and Mary's green, but pretty much everyone else is a yellow. But maybe going through the rest of this will help inform us so that we feel more comfortable with it.
Yep. I like the revenue. I like that it has a huge, massive user base that is quickly growing. The assets are sticky. They're clearly launching new products that are raising pricing power from users. So actually, I'm going to go green.
You recently told me a number like there are 60 million individual stock owners in America or something like that. Is that roughly correct?
60 million Americans own individual stocks.
So let's just assume that 25 out of those 27 million accounts are in the US. I mean, that's bonkers market share.
Not only that, but I'm pretty sure that they over-index on new stock pickers. So they are taking non-investors and turning them into investors as opposed to stealing market share. So they're expanding the pie. They're not taking slices of the pie, which is hard to do.
Yes.
Very hard to do. Okay. Good to know. Okay, next. Let's look at the company's moat. Do we think this company has, let's go here. Is this an action? Yes. Okay, next, moat. So we'll take a look at the company's moat. So there are 5 major moat sources. And then there's the current state of the moat. Is it no moat, narrow moat, or wide moat? And then there's the all-important moat direction. Do we think the moat is shrinking, stable, or best case scenario, widening? I would love people's guesses right now. What do you think is Robinhood's primary moat source? If you had to pick one, I know what I would pick here, but I would love to see what I would pick too. What Gemini would say about this.
Well, that comes up. I will just say that it's important to remember with switching costs, because we can see right there, and that's my big one is switching costs. Is just because you actually can trade, like switch which broker you use, doesn't mean that people will actually go ahead and do that.
Right.
But it is interesting because we're getting a lot of people here saying network effects as well. We've got a lot of switching costs, but a lot of network effects. And I'd be curious, to see what it has to say about that.
I am definitely interested in that too, because I would not have picked that out.
No.
Robinhood has evolved from a simple trading app into a diversified super app with deep ecosystem stickiness driven by its gold subscription and retirement matching. This shift is evidenced by a 35% annual growth in net deposits, reaching $68 billion. Okay, switching costs. It's a high friction to users by layering hooks like 3% retirement match, which requires a 5-year holding period.
Wait,
and Robinhood Gold.
a 3% retirement match?
That is enormous. I wonder if there's a limit on that.
Wait a minute. That's crazy.
If you have $1 million portfolio, they'll give you 30 grand for switching over.
No, I'm sure. Well, I bet it's like, a traditional IRA has what, like a $6,000-$7,000 limit or I don't know.
Yep. And customers move from casual trading to long-term retirement. The cost of migrating like screeds to a legacy broker. I have not switched brokers in 15 years. And when I switched, it was painful. So I would say that this is definitely you had a nice analogy here, Stoffel. You said that there's moats that increase customers coming in, and there's moats that prevent customers from leaving, right? This is definitely a prevents customers from leaving one.
Yep. Totally agree.
Okay, so 4.2 million gold subscriptions, up 15%. We are seeing our customers continue to trust us with more and more of their financial lives. That is great to see. Okay, next, intangibles. I would totally agree with this, right? The Robinhood definitely has a brand name with retail investors. Absolutely. And while it lacks traditional brand-based pricing power, its brand allows for extremely low-cost customer acquisition costs compared to incumbents. So this is a Moat, their brand name that gets people in the door.
Yes.
Right.
So that's the key, right? So this is what I was talking about with SaaS companies is you've got to have a front door that opens really easily and a back door that's like a vault. And the SaaS problem right now is that front door is broken, but Robinhood, that's not the case. The front door is wide open.
It's a good analogy, right? You said that real well. That's the danger of AI with SaaS is that the front door is not looking nearly as enticing as it was. The back door still looks pretty good, but the front door looks like it could have some problems. Okay, so this is how they attract new customers so easily is with their strong brand. I would definitely give them brand power for that. Okay, next, network effects. This one's going to be a prove it to me. One. Okay. While brokerage is not a traditional network effect business, Robinhood is building one through its 24/7 prediction markets and Robinhood Social. Increased volume of these proprietary market leads to better liquidity and tighter spreads, making the platform more attractive to new users. Its viral referral mechanism continue to drive the flywheel of customer growth. What the heck?
That's brand value to me.
What is Robinhood Social? Is that just like I bought a stock? You bought a stock. Let's compare what we've done.
For what it's worth, I just want to also throw out there the way that 3% contribution works is it's 3% up to 7,000 because that's the IRA. So that's $210. But you have to be a gold member. So that's $60. So net, they will give you $150 if you max out your account.
Got it. And this says we are just at the beginning of a prediction market super cycle. So prediction markets, for those that don't know, that's Kalshi, that's Polymarket. So apparently they've just entered that market as well. It's basically betting on anything.
Yeah.
Politics, news, sports. It's an exploding area for people that personally I want nothing to do with, but apparently the world does.
Well, I'll say this about prediction markets. And don't get me wrong, there's a lot of like sketchy things happening there. But Brian, do you ever hear people complain about the weather and the fact that the weather person did a terrible job making a prediction?
Sure.
Okay. The thing is if you look at how accurate most weather reports are, I mean, they're crazy accurate, all things considered. The interesting thing about prediction markets is that they cannot obviously predict the market, but I actually personally believe that they are probably the best tool that's available to see what might be coming around the corner. They're not perfect, But
No,
to me, it's a very interesting thing to watch. I don't play in it, but I watch it.
I do too. And I do think there is some value to saying, what do people think? Because again, you're putting your dollars behind it.
Yeah.
I think it's more accurate than quote unquote experts and all that kind of stuff.
Yes, I do
So I
too.
think that is useful. I think it has a use in society, or at least from a news perspective. I just want nothing to do with
Sure.
personally betting on it. Yeah. All right. We got to keep going. But another one here that's very interesting. Low cost production. So it's actually saying, yes, it does have low cost production, a significantly lower cost per account than legacy competitors because of its digital first, with no physical branches, and its AI resolves 70% of cases, allowing for scale. Would you qualify that as low cost production?
You know what? I would actually qualify that more as counter positioning.
Exactly what I was going to say.
Yeah.
This is a good thing that it pointed out that it has a different business model than Charles Schwab, than Interactive Brokers, than other companies. But that is not, to me, low cost production. Low cost production would be, we can buy and sell securities cheaper through our own proprietary model than other companies can.
Yep.
And so that isn't low cost production to me. That is counter positioning. So that's where I would actually put it here.
Yep.
But it says Robinhood was the pioneer. Legacy incumbents have already successfully replicated this and their advantage, but they do not meet the strict definitions where incumbents cannot copy them without destroying their existing businesses. So those companies have actually already destroyed their existing businesses to match them. But the no branches thing is certainly interesting.
Bottom line, if like from 30,000 feet to me here, is the front door is the brand value. That's what gets people in. The back door is switching costs. And I actually saw that Robinhood, you do have to pay a penalty if you transfer your brokerage to another provider.
There you go. So there's not only a time penalty, there's a dollar penalty to doing so. All right, what do you guys think? Red, this company has no moat, or the moat is weakening in nature. Yellow, this company has a narrow moat and the moat looks pretty stable. Green, the moat looks pretty darn good, and maybe it's even expanding in nature. I personally believe that after reviewing that, I'll definitely say Robinhood has a moat.
Oh yeah.
Yep.
I would say yellow. So I would say narrow but widening. That's how, I know we don't have that option, but mine would be a yellowish green, because
I'm going to go green.
Yeah.
I actually think it has a wide moat. I like the layering of the prediction markets. I don't know what that Robinhood social thing was. Actually, let me do a quick search on that. What is Robinhood social? What does that even mean? I'm guessing
it's sharing your portfolio.
In-app integrate community-driven insights with its trading tools to replace the noise of traditional media with verified. Unlike every trade is verified and live. Yeah, so you can see what other people are doing. You can follow people. So yeah, that is sort of that to me would be the most network effect like thing. But I know that there's lots of other places that you can kind of do that on. So I would say that that's a forming potential moat. I would not give them credit for it. But overall, I personally don't mind giving them the green on the moat side of things. Okay. Next, let's take a look at this company's long-term potential. So there's two ways a company can grow: get new customers or get existing customers to spend more. Now in Stock Simplifier, we teach you go here to fiscal and look right here. So this is a company that's grown revenue 36% compound annual growth rate over the last 5 years. It's expected to grow revenue 20% over the next 2. Long-term earnings per share growth is about 16%. So just the core numbers from fiscal indicate this is going to be a mid-teens to high teens grower. But why should we believe that the company has the ability to do that? What are going to be the major growth drivers? So let's go ahead and put it in there, and we will see what it says.
This is the thing that I'm the next most interested in, because I have to imagine there is still a lot of room to grow.
I would think so as well. So getting new customers, can they invest in sales and marketing? This says yes. Total operating expenses increased 38%, primarily driven by marketing and growth investments and supporting new product launches. High degree of confidence. New distribution channel, strong. The acquisition of Trade PMR opened the registered investment advisors channel and brought $43 billion in assets under administration to the platform. Okay, so they're getting into the professional market. Geographic expansion, strong. They are rapidly scaling in the UK and EU through crypto, it looks like, and plan to enter Indonesia via the acquisition of whatever that company is.
Mm-hmm.
Acquisitions, yeah. Well, we just saw 3 of them. So they just closed a $200 million acquisition of Bitstamp, which added 500K retail and 5,000 institutional customers globally. And that's a professional crypto exchange. Yep. How about existing customers? Can they increase through pricing power? Moderate. ARPU increased 16%. This is driven by product attachment rates rather than direct pricing hikes on core services. How about new products? Yes. The massive rollout of Robinhood.
Yeah, this is the big one.
Retirement match, prediction markets, and the launch of Robinhood venture funds. So Stoffel, one of your key signs of a good investment is optionality.
Yeah. Yeah. And
this company has it in spades.
And so they've got democratized finance for all.
Mm-hmm.
And, you can argue whether or not it's healthy to do all these things mentally, socially, financially, but they're doing that. Like they have the eyeballs. So that's the key. They have the eyeballs. And then once you've got the eyeballs and they're not leaving, then you can come up with new products that those eyeballs want to see. They're doing that. They're following that blueprint.
And not only that, but this is something we harp on a lot. Launching new products is one thing. Launching products that generate needle-moving revenue.
Yeah, that's gold
the
card.
Real test. That's
that gold card
test.
Being like, I don't know, it's between 15 and 20% of their users. I mean,
well,
that's impressive.
Let's see this in action. Okay, so if we go to fiscal, and we'll just pull up the revenue by segment. So crypto, equities, other, net, and other product revenue. So these are all their product lines, right? So then we just do this button right here, and that kind of stacks them up. And then we can actually visualize the growth rate. So here are the components to their revenue. So green is options revenue. So this ebbs and flows for sure, but you can see how it's a major source of revenue. This is crypto.
That's going to really ebb and flow.
Ebb and flow big time for sure. This is stocks, so equities. So fairly stable-ish. Red is interest.
No, the red only starts later. You got to go.
Oh, you're right. Other transaction revenue. I think this is prediction markets.
Okay.
So mighty but growing. Net interest revenue. So look how much interest they make. Interest is a major revenue source.
Yeah, I mean, you're holding people's cash and you're in a high interest rate environment.
And then other product revenue, that's probably gold memberships and stuff like that. But each of these things that they've launched are needle moving.
Yep.
Needle moving revenue. So I would give them full credit on your scale for optionality there. New products and services. Okay, customer retention, strong. Net deposits were up 33%, totaling $67 billion, and their deep wallet share and capture from existing users. So overall, new products and services, and they're transforming into a financial super app by adding credit cards, retirement accounts, and venture funds. Geographic market expansion is another one. Secondary drivers are acquisitions, which they're doing, quote unquote, surgically. Untapped is institutional brokerages to be the power behind there. So lots of avenues
to me this is an
growth.
Easy one.
Yeah. But what do people think? What do you think of this company's long-term potential? Very poor, low or negative, yellow, pretty good, or green, pretty great for long-term revenue potential and growth potential here. So again, I like to look historically. It's a combination of what has the company done times what's the story about their growth levers moving forward. What are people saying?
So most people say green, but we do have some that are bringing up caution.
Fair.
Specifically saying during a recession, this could not only go down, but could go down real fast.
Look what happened in this year. So this was not even a recession. This was just inflation / stock market. It was 2022 a crash. I don't even know if it was a crash. I mean, my portfolio certainly
wasn't
crashed.
my portfolio.
Yeah. So we'll call this a stock market crash. This was a stock market crash, a crypto crash. And yeah, so this company's revenue is going to be tied to asset prices.
Yep.
Stock market does well, revenue does well. Stock market and crypto does poor, revenue does poor. So, but if you take out the cyclicality, it's definitely going to be cyclical. I would say that the long-term potential is pretty good.
Yeah, I do too, but I do think that those warnings are fair. Like it could 100%. React negatively.
Yep.
To a greater degree than the rest of the market.
And by the way, that cyclicality makes valuing a company like this way harder.
Yep.
Way harder because you don't know if the earnings are real and sustainable. You have to get to the real cyclically adjustable earnings before you can make any analysis. And that's very hard to do. So traditional valuation metrics are going to work very poorly on this company. You just got to know that going in. Okay, next, key metrics. Some of these key metrics, Stoffel, also because this is a financial company, might not be all that useful.
Agreed.
You just got to know that going in. But anyway, let's do the key metric analysis. This is the one that Gemini and all AIs kind of struggle with the most. So we will back them up with looking at fiscal, which is data we trust. Okay. So revenue growth over a 3-year basis, this says 52%. So the target is 10%. I know right up front.
But it said 52 just last year in parentheses on Gemini.
Well, this says 48% over the last 3 years.
Yeah. So it's definitely above.
Yeah, definitely above. So that one is over 10% for sure. Okay. Free cash flow conversion. This says 100% free cash flow conversion. That's definitely above the 90% mark. So this is in financials. Let me close out some of these. This is going to be in ratios. And I think it's in margins is where they keep this one. Free cash flow to net income. Okay. So look how crazy these numbers are. Yeah. Okay.
You got to pull that forward.
I will have to go more.
Here's the thing though, Brian, with the kind of things that Robinhood does, free cash flow doesn't mean anything.
It really doesn't, or it's a much harder number to look at. So according to fiscal, they only convert 43% of their net income into free cash flow. You want to see this number over 90%. But again, if we look at the cash flow statement here, these numbers are going to be weird, aren't they?
What is that? $9 billion change in trade receivables.
Yeah.
I mean, look at that.
Yeah. How do you trust free cash flow when you have massive movements in trade receivables, massive movements in payables? What's stock-based comp? Actually pretty small.
Yeah.
By comparison. Yeah, this is a company with like no capital expenditures, very small, short-term debt issuance and stuff. So yeah, their free cash flow is
it just doesn't mean that much to me.
Okay. Yeah. So this is a number that I don't even know how to, maybe we just leave it blank.
Just give it yellow. I don't know.
Well, we'll go yellow, but this is not a very meaningful metric for a financial company.
Yep.
EBIT to interest expense is going to be another one that is not going to be all that useful for a financial company because interest expense is going to be huge and it's not going to be interest that they pay, I would imagine. Anyway, we'll look it up. You typically want this number to be over 5. Let's take a look.
Is capital efficiency? Can't remember.
Financial health.
There you go.
Financial health.
If it's not there, it means that they don't have any interest, which they might not have an interest expense.
You're right.
Because if they don't have any debt.
Yeah. So remember at the top of the show when we said this might be a hard one to analyze? This is why it's a hard one to analyze. Well, let's just go to their income statement and see if they actually report any interest expense.
It's just non-operating income and it's zero. It's basically been zero for the last 5 years.
Yeah.
So
the key thing to look at is their balance sheet, which is going to be hard to analyze. For 4.7 billion in cash, restricted cash is 6 billion. Securities borrowed is a short-term asset. Accounts receivable is 18 billion. Analyzing companies like this is hard.
But no long-term debt, really.
But no long-term debt.
No long-term debt.
Yeah. So the thing that we're trying to get out with this is the balance sheet healthy?
Yeah.
Right. And can they afford the debt that they have? I'm just going to say yes.
Yeah.
I think that even though that the metric isn't perfect there, this is another one. Return on invested capital. Is this the best metric for financial institutions / banks? No, it's usually return on equity that you would use there. Again, hence why this company is going to be challenging to analyze there. So that
we can look at both. Let's look at return on invested capital and then let's look at return on equity.
All right, so it is positive. 9% return on invested capital, return on equity, 44%. Yeah. So return on equity is the superior choice for figuring out financial institutions returns. So 44%, that is absurdly high.
Mm-hmm.
Right? I mean, most banks you're like 15% is good. This is 44%. So even though return on invested capital is only 10% here, I'm actually going to go 20% on this one. And then finally, capital returns. We know that they were
but less than 5.
Yeah, yes, less than 5. So okay, so that was harder than most would be, and we should think about adding some prompts here that are for financial institutions, or kind of do that and that help users to kind of figure that out, because that is not easy. It's not easy to do key metrics on a company like this. All right. With that out of the way, let's move on to
Olivier. Real quick, Olivier does rightly point out that if we look at return on equity over 5 years, which I think is what we tell the prompt to do, it's negative because they were transitioning, which is why this is saying it's a stage 5 company is so hard, because most stage 5 companies, you can take a 5-year average because they've been in a steady state for a long time.
Yeah, absolutely. So this is a return. So fiscal shows the 5-year returns right here, and you can see that the return on equity is negative on average over the last 5 years. But I think you need to you judge them by basically when they were profitable.
Yeah.
And on that metric, they're actually doing pretty good.
Yeah.
Yeah. So every company is unique. Every company is unique. Risks. Let's get into the risks. All risks can be summarized as one risk: execution risk. So there are sub risks to the one execution risk that we're trying to go for that make it harder to execute or easier to execute. There's concentration risk, disruption risk, outside forces risk, and competition risk are the main ones.
I can tell you which one right now I think is the biggest one.
I can tell you that too. But let's see if this agrees with what we're thinking.
I'm thinking outside forces.
I'm definitely thinking outside forces. We already tied that.
I just want to say it before it pops up so people don't think I'm cheating.
So the overall risk summary here is medium. The biggest risk, outside forces, and this is saying payment for order flow and regulatory and competition, with the key mitigation being the subscription into gold and retirement assets. Okay, concentration risk. This is saying yellow.
But I see they're saying from their revenue streams. That's not a thing for
They're saying that their transaction-based revenue is a single source of concentration.
Well, okay, wait, but if you keep reading, and if you watched which Netflix movie was it where they talked about what happened with Citadel and Jane Street, and Robinhood kind of had to bend a knee to them, I could understand why that might be a thing.
Okay. So they're such significant portions of their revenue
Order
because
flow.
they make money by selling you the data and the trades that their customers are making before they make it. So, okay, maybe that's more fair than I was going to initially say.
But I think yellow trending down would be correct.
Yeah. Disruption risk, they're saying not a problem.
They
Robinhood,
are the disruptor.
they are the disruptor in the space. And with the prediction markets, they're becoming more of a disruptor. I would say that that's not an issue. Outside forces, red for sure. High exposure to shifting regulatory landscapes. The SEC continues to scrutinize the payment for order flow, which is how they got started, and accounts for 60% of their order flow revenue. And crypto revenue is highly sensitive to the treatment of digital securities. It didn't even bring up revenue is highly sensitive to markets, crypto markets, and stock markets, and just
even interest rates.
Retail general interest in this.
Yeah.
We know what do retail investors do? They get excited in stocks at all-time highs, and they become no, they don't want to touch stocks at all-time lows. It's exactly the wrong behavior. And
it's why investing is profitable.
It's why investing is profitable if you can do the opposite, which is what most people don't do. But that to me is a massive risk, right? They could execute beautifully, but if crypto markets go down and if the stock market goes down, they're not growing.
No.
They're always swimming against the tide.
They might even gain market share, but as an investor, you're not going to do well.
Correct.
At least over the medium term.
Right. And competition risk, the market remains hyper competitive, but with neo brokers like Public and SoFi are matching their commission
this
rates.
Is why that brand value is so important.
Correct.
Because that's
getting people in the door. Yeah.
The front door is grease.
And by the way, if you're a believer in the P.T. Barnum quote, I don't care what you say about me, just spell my name right. 2022 and the whole fiasco related to GameStop was nothing but a brand builder for him.
Yep.
Yeah. So they're saying yellow, green, red, yellow. I'm curious what people think. What do you guys think of the execution risk here? Is this a high risk execution company, a medium risk execution company, or a low risk execution company? I know what I would say. I know what I'm going to say to this.
Yep, me too. So far, we've got a couple of reds, 3 reds and a yellow. Got some more coming in. I'll just go ahead and say mine's a red.
Definitely red. Doesn't mean they can't do it. Doesn't mean they can't execute. In fact, they've executed brilliantly over the last couple of years.
Oh, they're doing everything right.
Everything right.
This is not an indictment on the team running this company. It's just the rules of the industry that they play in.
Not only that, but I would say it highlights the skill needed of management.
Yep. Right.
You need management to be highly skilled and executing at a very high level to navigate these risks. So it's a hard job, and it raises the risk profile significantly.
You would have to understand this industry really well to make a big bet on it, so that you knew whether or not they were doing a really great job.
The founders clearly do, because they've gotten this far.
Yeah.
Right. Clearly they've done that. I think this is a $70 billion company.
Yep.
Okay. To me, no doubt, it's a very high execution risk company. All right. Oof. This is going to be hard. Valuation time. So the reason we teach the business growth cycle and knowing which phase the company is in is because the primary method that you should use to analyze the company's valuation needs to change depending on the phase that the company is in. Now, we identified that this company is in the capital return phase. So price to earnings and price to free cash flow trailing are going to be decent choices, with the huge caveat, this is a financial company and they operate by different rules and valuation metrics than normal companies do. But with that, we will go and take a look at those metrics, and then we'll critique them to see what they say.
Yeah, I don't know if we're going to learn much from this, but it'll be interesting.
Trustworthy, or you should be highly skeptical.
Right. And again, that's not a knock on Robinhood. It's just that is
the nature of the business
field that they are in.
Okay. So let's look trailing PE. All right. So we will, let's see, what's that, 2023. This is when they became profitable. If I go quarterly, looks like they became profitable in May of 24. Yeah, about there. Okay. So trailing PE, over the last 2 years. And keep in mind, markets have been pretty good for the last 2 years. So this is revenue and profits are going up. This says 39 times trailing earnings, which if we compare that to what it's been at, that looks pretty good, right? It doesn't look all that
cheap on an absolute basis, but compared to itself, it looks good.
How much faith do you have in this being a good metric for valuation?
On a scale of 1 to 10, I give it a 3.
I would give it a 2. Yeah, personally. So don't put a lot of faith in this PE number. Although just note what it says. Let's try price to free cash flow, which we previously noted just how hard it is to analyze this company's free cash flow.
Look at those numbers.
I'm sure we're going to get equally as a nutty number. This number is even more all over the map. Geez, we have to go just to the last year to make this accurate. Okay, yeah. How much faith do you have that this is anywhere close to usable?
None.
0. So this number to me is basically useless for judging this company's valuation here. So still,
honestly, I feel like we need like a price to sales ratio, just because that might be the only. But you can back that one up. Back it up all the way.
Certainly can. Okay, so let's say they IPO'd at, let's call that 5 times sales, immediately jumped to
really high
30. Did they 600% grow from the IPO price? My goodness, was this company? Well, I guess the price that they IPO'd at was what it traded at over the next 5 years. So they actually got the price right. It's just the market went a little bananas afterwards. All right, let's take out that craziness. Let's see. So they've traded at an average of 7 times sales roughly since soon after IPO and the market settled down. Currently 23 times sales.
So 3 times more expensive.
3 times more expensive on a price to sales basis. Would you agree that they deserve a higher price to sales ratio because the business is more resilient now?
Yes.
And they're profitable.
Yes.
Yes. So I'll say that the company deserves a higher valuation. Triple the valuation is a little dicey.
Hard to say.
You know, let's also look at price to. Do they have a gross profit the same way that most companies do?
Yeah, see, that's tough.
Another one that's a little bit tricky. Profit. So this is price to gross profit. So this is revenue minus cost of goods sold. So this is the profitability of the product themselves. Again, it's not perfect. I'd argue it's better than price to free cash flow.
Yeah.
From a valuation perspective, let's do a middle of the road line there.
I mean, Brian, I'll ask the question that Olivier's asking here. Well, what the heck would be a trustworthy indicator?
Yeah. A good trustworthy indicator to do this company the right way is you would need to take their revenue. You would need to apply a reasonable net margin to it. That would be your normalized earnings. And then that would be, let's go ahead and do that. So what do you think is a good comparison for them? Interactive Brokers?
Sure.
Or Schwab?
I mean, let's look at both of them, and then at least we are going to end up in the right ballpark.
Yeah. Okay. So let's take a look at Schwab's margins just to get an idea of how the company is doing. Okay. So let's look at margins. So this is Charles Schwab, and let's see, their free cash flow margin is negative. So yeah, that's no good.
Net profit.
Pre-tax profit margin of 50%.
Net profit margin of about 38%. It's anywhere between the mid 20s to the high 30s.
I had no idea that they were that profitable.
What about IBKR?
I know Interactive Brokers is absurd.
So it's going to be even higher?
It's going to be even higher. Is this quarterly? Let's do annual to kind of like help to. So the net profit margin, it's consistently over the last 10 years, call it 30%.
Yeah. What would happen if we gave 30% to Robinhood?
Well, we'll look at that, but let's just do that same analysis on Interactive Brokers. Okay, so these are fully scaled companies. Look at this company's profit margin. 70%. Wow, what a business.
That's crazy.
That is unbelievable. For every dollar in sales, they generate 70 cents of after-tax profit.
Wow.
That's higher than MasterCard. That's higher than Visa. Just incredible. Okay. So with that in mind, would it be fair in your mind to say that this company could generate a 30% net profit margin?
I think 30% is totally reasonable. We might be lowballing it.
Actually, why is this 80%?
No idea.
It's already 80%.
Pull the timeline back so you can see.
Yeah, look at that swing. Okay, there's no way they have a 95%.
Yeah,
net
see,
profit
I don't even know what the best thing to use would be.
All right, well,
I'd have to go in and study each underlying component revenue stream to see what kind of margins they produce.
It's a neat trick to have a higher net profit margin than an operating margin, right? So this company, it just shows you how much wonkiness is in their financials. But okay, I'll assume 40%. Let's just assume 40% for the sake of argument. Okay, so if we took their revenue over the last year in 2025, total revenue is $4 billion. Okay, if you convert 40% of $4 billion, is
1.6.
1.6?
Yeah.
Okay, so 1.6 billion in quote unquote normalized profit, 1.6 billion, and their market cap is 70 billion.
So it's trading for about 44 times normalized. But I will say the only thing that matters is our choosing 40%. Because if we choose 70%, it'll be a totally different number. Right?
Exactly.
But 44 is what we get.
Yeah. So was that actually close to what their PE is? That actually was pretty close then.
I think remember what
their PE is
39, 38.
Okay. So maybe their PE isn't as crazy as I thought. As a number. Either way,
really
you can see the mental gymnastics that we have to jump through to get it. Let's just look at their forward PE since we're here, because that might be a little bit more accurate.
Well, the nice thing about forward PE is now the analysts are doing a lot of that figuring for us.
Yeah. Okay.
35.
35 times next year's earnings, with a huge band around the company's next year earnings, depending on, well, what do markets do and how does that impact revenue? So, well, again, valuing these companies is hard.
I know we're going to give our rating. Like, what do we think of this? For me, this is just in the too hard pile.
So red, yellow, green though. What do you think of the value of the valuation? Not that we didn't interject all kinds of confusion in there. On a price to sales ratio and a price to gross profit, there's no doubt this company is a red. On a price to earnings basis, if you trust the next year's earnings, I could be talked into green.
Whoa.
Yellowish green with a very low confidence on that number. But I'm curious what viewers say. And I'm sorry if we just confuse the heck out of you.
Well, I think we're doing our job if we confuse people, because it's confusing.
Yeah.
Let's not oversimplify it.
Not an easy company to value. You know what? We didn't even look at, but it might actually make sense. What's price to book?
Yeah.
I know they have price to book, P2B. Maybe this is the best one.
Maybe.
Price to book value.
I would say our average response here is yellow.
Yeah. Let's look at price to book. So they were trading at about 1 times book value for a long time. Now 7 times book value, as high as 15 times book value. Yeah. 7 times book value. I wonder what Schwab is as a comparison. If we go to Schwab's book value, I'm guessing it's much lower than that.
Yep,
price to book value. Yeah, 3 times. Yeah, I mean, again, if you're looking for a valuation metric for these companies, price to book is pretty good. Price to book is probably as good as good as you're going to get.
Yeah.
All right. So on that front, what have people said, Stoffel?
Mostly yellow.
Yellow seems reasonable to me.
Yeah.
With a huge caveat of boy is that hard to analyze.
I agree.
Okay. Let's take a look at the company's sentiment, though. Why is the stock trading where it's at? And get some analysis on what is the sentiment on Wall Street surrounding this business.
I mean, it was like super bullish for a year, and then in the last couple of weeks, it's gone in reverse.
Okay, the stock has experienced a massive rally through 2025. It record-breaking revenue. However, it's since pulled back significantly as high-velocity trading cooled, and investors grew cautious about the sustainability of triple-digit growth.
I mean, so Bitcoin plunged.
Yep. Oh yeah, Bitcoin has plunged. Good point. Analysts, I mean, has positive. They're saying $130 per share. So analysts are bullish, investors are neutral. The media is mixed. Of platinum and venture cards, the institutional buybacks, they're buying back stock. The bulls say diversified revenue, vertical integration in the retail super app. I would agree with all of that. The bears say declining trading velocity, regulatory dark clouds, and intense competition. I would agree with that. And 52-week range. Look at that. $30 a share.
You
to
have efficient markets, Brian.
Bucks. Yeah, I know. And then some there. Okay. All right. Well, hard company to analyze. What does everybody think here, taking it all into account? So we said pretty good business, strong moat, great long-term potential. The company's key metrics largely looked good. High risk venture, and valuing this company is very hard, but we surmised yellow, although you could easily talk me into red and green.
That says a lot.
I know it does. It does. But are you guys interested? Red, yellow, green on Hood's stock from today.
Yeah, I'm going with everybody else in that. I'm just red, and again, that says more about me than it does. I know people who are smarter than me who play in this industry who are green. I cannot borrow their conviction though.
Well, so let's just say if you buy this stock, what are you betting on? You're betting on continued execution. You're betting on continued sucking up of assets, and you have to be aware that the stock is going to be extremely volatile alongside the market. So you're going to experience when bull market, this thing's going to soar. Bear market, this thing's going to crash. Not that that's different from any other stock, but the financials are going to do that too.
I would say this though, long term, like long term, it would be the number of accounts continuing to grow would be probably the most long term, not explaining month to month movements.
Yeah.
But if I'm holding this for a decade, if I can only watch one thing, it would be the number of accounts they have.
I would love somebody that knows this company better than we do and is a good financial company analyst to give me their best pitch for this, because I could see them coming away and saying, oh, it's down 50% green. This company is doing is doing it all. So like you, I'm putting this in my red pile just because it's too hard to analyze. But if some people own this company and want it for the long term, I fully understand why. Fully understand why. Great. Well, thank you guys for joining us today. We do want to let you know that we have been working for the last couple of months on a brand new version of Stock Simplifier. It makes things so much easier. So here's a little sneak peek of what we have been working on. So a much cleaner interface to go through everything that we've done. There's one place to go. All the information comes to you. The AI analysis is done on the spot. High quality, pure financial data is pulled directly into the app. And I just gave you some mock-ups here. So here's what happens when you research Robinhood stock, for example. We say, is this the company you're talking about? We pull in the logo. And what's really cool is since we are making this, Stoffel, we can do it our way. So
we can do whatever we want.
We can say, put the company's mission statement right on there, because that is important to us, that we know what the company's mission is. And we can say, analyze the company's growth phase right as part of the analysis. And we've actually added in things like the management team. So we show you who's in charge, how much stock do they own, how long have they been there, what do employees think of them. So we are super super excited about this new version of Stock Simplifier that we have coming out. As you can see, this is still in beta. We're working through everything right now. So if you've already purchased the existing version of Stock Simplifier, we're going to give you first access to this new one. We anticipate being able to launch it in April. If you are not an existing user, but you want to be notified of when this new version is available, join the waitlist for it. We're estimating very early May. We're trying to accelerate these timelines, but we really want to get the analysis right before we launch anything. So if this new version of Stock Simplifier interests you, just go to longtermmindset.co/waitlist, and we will keep you up to date with everything that's happening on it. And we'll show you, we'll tease more about the user interface kind of as we go. Stoffel, if you could share that link in the chat, that would be very, very, very helpful there. So thank you guys for joining us. Thank you guys so much for joining us today. This was certainly educational for me as I got to know Robinhood a little bit better. And sometimes too hard is perfectly okay.
There's no called strikes in investing.
There's no called strikes in investing. I think there's lots to like about this company, but man, I would want to go even deeper than we just did before I would feel comfortable putting my capital at risk behind this company. So
one quick note. Yep. Everyone who gets our newsletter, if you don't, you can sign up by going to our website, Long Term Mindset. You can vote on who we're going to be doing if you subscribe. So please do that. You can have a say in what we do over the next couple of weeks.
Absolutely. We love doing these stock analysis. We hope that you guys enjoy watching them too. And we want to know what stocks interest you. In the next couple of weeks, we'll be able to use the new Stock Simplifier so we can really show it off, but we're not there yet. We are getting closer each and every week though. So thank you guys so much for joining us today. We will see you next Tuesday.